So can you please describe something that what is the process of a founder to get listed? Whatever the down the line it is, it may take 5 years, 10 years, and what is the shortest period of time that if a startup is getting founded today, that what is the minimum duration that that company can be listed in the market?
Okay. So I will give you the entire chronology from the birth of the company till it gets listed.
That will be fantastic.
The first time you come up with an idea to get to start a company, listing is miles ahead. Like it's a possibility. It's not. It could happen, could not happen.
Yes.
The first thing you think of is, okay, fine, I want to start a business of my own, X, Y, Z, whatever. The first people who actually invest in your business are the people who are investing in you and not your business. They are betting their money on you. That, okay, I know this person, he's ethical, he does good business, he has business sense, the product which he's trying to sell is good. For example, I'm going to start a business of selling a pen which has a very different color that no one else has. People will understand, okay, fine, he's thinking, invest. Those are your angel investors, your friends, family who are putting in money. They're called angels for a reason.
Yes.
After that stage is crossed, then once the company starts making money, etc., or if the ball keeps rolling, you reach a stage in your business where you're like, okay, fine, I need to grow to a much bigger stage. To grow to that much bigger stage, I need capital. How do I get that capital? Either I go back to the angels again, tell them, look, I want to go from point A to point B. I need some more money to do that. If you can give me some money, I am happy to take it and give you some share of my company as well. That is a very normal way of doing it. The more challenging way and more systematic way to do that is going to a VC. Now, a VC will not give you money just like that. They won't give you money on your personal brand. They will give you money based on your business. You can have the best name in the market, but your business can be absolute trash. But if your business is good and your name is somewhat okay, they will be okay. They'll be like, okay, fine, your numbers are fine. You could be a loss-making company right now, but we know how to channel this in such a way so you become profitable. Or if you're already profitable, we can make you more profitable. We can connect you to the right people. Or, for example, they may have listed companies looking for people like me to take over. So VCs will want that first mover's advantage, that they will buy your company, they'll take a stake in your company and then go and sell it to a listed company whole and soul. So they get their exit, the angels get their exit, I get my exit. So multiple companies have done that, where these big companies have taken over these sort of businesses. For example, Marico has taken over a lot of businesses like this. And even Nestle has taken over a lot of businesses like this. When you can't relate to that crowd, you buy the company that is doing that. It costs very less for that company, and it's a win-win situation for everyone.
Right.
So that's where VCs come in. Now you must have heard Series A funding, Series B funding, Series C funding.
Yes.
These series are basically to spread the pool of your ownership and to get more money, give exit. For example, if I have 10 founders, or if I have some investors who want an exit, I will look for people, okay, fine, you want to take a stake in the company, I'm okay to sell it to you at this valuation, etc., etc. And then accordingly, I dilute my stake. Now, when you are in that's a very crucial phase in your business, whether you have to realize that, do I need to continue to dilute my stake, or do I want to move towards an IPO?
Okay.
Because either I'm looking for an exit via these companies that buy me out, or I'm looking for an exit via the public route. There are two ways. Or the third is that I can continue to do my business the way it is, which 90% of Indians are doing. If you see these shops,
all family businesses.
Yes. They are very happy that they don't want to do their extra compliance. Their house is running. They're growing their business.
Yes.
They're facing challenges. It's fine. They don't want to get into that whole trap of they want to continue to create that legacy.
Yes.
That a family member takes over, etc., etc.
Yes.
Which is the normal mentality that we have. So these are the various roadmaps. Now, if I choose to get acquired, then my chances for an IPO are never there. If I'm being acquired, then probably a company that is already listed in the stock market is acquiring me. If I choose to get acquired, then my VC contacts a merchant banker.
Okay.
Merchant bankers or private equity players, they are like the big daddies, they are much bigger than these VC funds, etc. They don't pick up a small stake in your company. They won't pick up like 2 crores 3 crores worth of stake. They'll just come in and buy out probably half your company, probably 60% of your company,
Yes.
or 30% of your company. Those are the people that then sell their stake in the market when it gets listed. So private equity players, so first you have VCs, then you have private equity players who then connect you to merchant bankers who help you get listed. So that is the whole process. And people may think listing is, like a milestone in someone's business. It is not easy to get listed, because luckily we have a very good regulator in our country, SEBI, which asks you that one very important reason of getting listed. Why do you want to get listed?
Okay.
What is the reason you want to get listed? What will you do with the money? Do you have a proper plan? And if you have a proper plan, who are your vendors? Where are you spending that money? How are you spending that money? Because at the end of the day, this is going to be public money. So you are fully responsible for public money coming to you. So they want to know your exact plan. And if you're not going as per plan, you have to report that to SEBI. So they are like, hawks eyeing you on a daily basis as to what you're doing. So sometimes people think एक बार list हो गया तो अपना काम खत्म हो गया. It is not like that. You are following very strict compliance quarterly, monthly, daily, annually, semi-annually, you name it, and it's happening.
Okay.
So it is very, very, it's not as easy as people think it is. एक बार list हो गया तो काम हो गया. No. After listing, there are so many things that a company has to do, like, corporate actions, making sure your annual reports are going on time, the kind of people you're hiring, every single thing is documented, and it cannot go beyond a certain threshold of timelines, because after that you start getting penalized heavily. Then it's not like a 5,000 rupee penalty, 10,000, then it's like crores of penalty coming to the company, and that's a lot for a company to lose.
What can be the shortest time period if a company is trying to get listed?
See, if you are very serious about getting listed, I would say on an average you can take up to a year and a half.
एक साल में लिस्टिंग किया जा सकता है?